You don't need thousands to start investing. You can start with as little as £1. Yes, literally £1. And I'm going to show you exactly how I would invest £100 today. Hello there, I'm the Value Investor. I help people save and invest intelligently. A lot of people wait until they have enough to start investing. The problem is, while you're waiting, you are losing time, and time is the most powerful factor in building wealth because compounding, the earlier you start, the more the money actually works for you. So there's something called fractional shares, and I think this is the best thing that happened to the market since sliced bread. So fractional shares are shares that you can buy for just a portion of the share price instead of the whole share. So for example, Berkshire Hathaway costs 698,000. You actually got that right. That's 698,000. That's more than half a million US dollars. But you can buy a share with £1. And I've bought shares with $10. So Berkshire can't limit or gatekeep their shares to us, the poor investors. This is a total game changer for the beginner investor because you can start investing with as little as £1. You can spread the small amount across multiple investments. Starting small is very, very important. And why I'm saying this is because you don't have to wait until you've got enough. And also, the earlier you start, the more time that money has to grow because compounding actually works better over decades. Don't forget that you are also building a habit that will make you a millionaire. So, this is where I'll put my money if I'm going to be investing £100. £40 is going to go towards Nasdaq, and these are index funds. So when you buy an index fund, you buy a basket of funds that gives you diversification, which is built into that fund. So when you buy the Nasdaq, you're buying over 100 companies and you're using 40. For the Nasdaq, the growth is quite aggressive. You have this fund giving you about 15 to £20 over the last 20 years. And this is why they are called growth stock. And then 30% is going to go towards the VUSA. And VUSA is the Vanguard S&P 500. This is the index that tracks the 500 biggest companies in the US market. So they are very stable and you have instant diversification, as you can see, over 500 stocks. And then you've got the 30% global index fund, which you can get a lot of variations of this. You can get the FTSE All World or the MSCI World. You can also get quite a lot of BlackRock or Vanguard index funds, which expose you to the global index. So this also gives you instant diversification and hundreds of companies in one portfolio. So the World Fund protects you against country risk, which is the US stock market. So again, this is why this works. Tech growth is historically very strong over the long term. So this is why I would prefer to actually put 40%. US stability, that's the S&P 500. That includes top companies like Apple, Microsoft, and Amazon. This is also good because you are actually getting a lot of diversification and stable companies as well. And then global diversification, you're spread across multiple countries and sectors. I like this because it removes that country specific risk. I like investing, most of my money is invested in US stocks. So, what is an ISA? When you're investing, you have to be investing inside an account known as an ISA. Stands for individual savings account. So, an ISA is a government backed account where gains, dividends, interest, um, are tax-free forever. So the ISA allowance at the moment is £20,000 a year. If you're blessed and you're earning more than a certain amount and you can afford to put, say, 40,000 into an ISA every year, you could share that between you and the partner, for example. And then you could both max out your ISAs. So even small accounts, they grow tax-free over decades. So this is available with most of the brokers out there. I'm using Trading 212 and Fidelity for my son's ISA. That's my ISA right there. And when you open your Trading 212 account, if you click these three dots there, it will give you this screen right there. If you've just opened your account, you just click on the stocks ISA and then you open an account, and then you'll be good to go. Start investing. Motivation alone won't take you far. You need systems. You need systems in place to make sure that come rain, come sunshine, you are doing exactly what you're supposed to do. And I like this because it actually removes emotion from investing, and it also follows the dollar cost averaging technique. So the dollar cost averaging technique is where you are just buying stocks regardless if they go up or down. So when they go down, you get a lower average price. When they go up, you get a higher average price, but you get less of those stocks. So this builds the habit without having to think about it. And this is very important because this habit is what's going to make you a millionaire. So it also makes market ups and downs less stressful because it's just on autopilot doing what it's supposed to do. So the mindset that you need is start now. Don't wait. Investing is a long game. Patience is key. Open an account, start investing now. So set up your direct debit, reinvest all the dividends. That's how the compounding picks pace over time. So if you've enjoyed this video, please leave a like, share it with someone who is looking to grow their wealth. Any questions, please leave a comment in the comment section down below and I will make sure to reply to every comment.